This conference will now be
All right, good day,
recorded.
everyone. I am Steve Szymanski on behalf of Wealth Foundations Northwest. I'd like to welcome you all to the weekly prepper, getting you ready for the trading week of July 20th. Happy to be here with all of you. If you want to reach out to me for any reason whatsoever, that's where you find me. If you want to, excuse me, to make suggestions about, so excited about the market that I'm all choked up. If you want to make suggestions about anything you want me to teach you, happy to do that as well. So, just a quick reminder that your trades are yours, not ours. We don't act as advisors in any way, shape, or form. Trading does, in fact, involve risk. I'm going to do a normal schedule this week, and next week I am busy. So, no classes next week. Sorry. And I will continue to look after the model portfolio, though. So we are doing classes this week, but not next week. Okay. So here's our recent trades, and so our Iron Condor is doing well on Mo right now. Closed out the Iron Fly for a nice little profit, tidy little profit there. That was done on a automated limit order. So I just placed the limit order for the profit I wanted. I wanted at least $100, and it came true. And just like that, just set it, forget it, like that. Started a long call trade on Bank of America, and it's close to break even right so far. And started a boing boing on XL. No, we didn't start a boing boing. We've had that on for a little bit here. So we're waiting for XLV to boing. Mastercard bull call spread doing extremely well, and maybe we'll be taking profit on that, or at least put a trail stop on that. So let's look at each and every one of these, and let's manage them together, shall we? So the first one is the Iron Condor on Mo, and so if we look at Mo, then the key thing here is we want it to stay within range here. It's barely doing so. And so if I can close that, because we've been in it a while. No, we're in this till August. Let's just monitor this. We have earnings coming up on the 30th, so we'll want to be out of this before the 30th. Maybe what I'll do is I'll put in a stop order just so it doesn't get away from us. If the breakout is a fake out, we're in great shape. If not, actually we're down 59 on this one. Apologize for that. I'll fix the chart. We're down 59 right now. Let me just trail stop this just to make sure it doesn't go kablooey on us. Create closing order. So we'll buy to close, and I'll just put it not a. Do I want a trail stop or a stop? I'm gonna do a trail stop because I want to get out of here in the next 11 days, anyways. I'm gonna trail stop it, but loosely. So I'm gonna do a trail stop on this entire structure. I think it's liquid enough where I can do that, and I'm gonna put about a 40 cent trail stop on that, because yeah, that's liquid enough. I think a 40 cent trail stop will keep my loss near $100 if I get stopped out right away, which I hope I don't. And let's make that good till canceled. Okay, firm and send. All right, I must have not have updated that recently enough. Okay, so correction, we're not up 15 and we're down 59. That changed. And so Bank of America, let's look at Bank of America. BAC, and as long as the breakout isn't a fake out, okay. In other words, here's the breakout level, and it broke out, and it's kind of staying more or less there, but it's hanging in there on decent volume. And as long as it doesn't go below the breakout level, then I'm just going to stay with it. Now, because it looks like it's starting to base, I'd be tempted to sell a short against it, up here around 63 or so. So let's just see what we could get paid for that. Probably won't be much, but I'd be okay with doing that while we sit there and mark time. But because the breakout hasn't failed yet, I think I'm going to wait on that. I think I'm not going to do that just yet. So let's just see how that plays out. XLV boing boing, waiting for that to the 2-day RSI on that to go higher. XLV is, it's, oh, we did get our Boeing signal, by the way, so we should take that out. We got our Boeing signal. I missed it. Somehow I missed that signal. That should have been a winner, right? We should have been able to take that out. Well, maybe not this day or that day. We should be able to take that out either day. What did I miss that Boeing signal? Did I put a trail stop on that? You know what I might have done? I might have put a trail stop on it and then didn't make it good till canceled. That might be what I did. So that boinged like we wanted it to. And but I think I might have missed my opportunity for profit due to poor management, poor trade management. So create closing order. I'm going to sell these with a trail stop, and then I'll monitor it in the morning here. Just a little 10-cent trail stop. Make it 20. Give it a chance here because it still looks good. I mean, if I were not in this trade right now, I might think about getting in it. So confirm and send. Healthcare is a pretty reasonably decent trade right now, and Mastercard. Okay, this is the big win so far. All it takes is one really big win, and then it broke out, and then I must be a day behind on tracking this because this is I should have closed this way. No, I shouldn't have because we broke out, and as long as we stay above the short strike, we're going to have a max win. So the short strike is what? Our short strike on MasterCard is, we got to sign shares. We got to sign shares because the long was in the money and the short. All right, so we'll put a trail stop on the shares. So what happened is the long was in the money and the short was out of the money. I'll trail stop these shares, not a big deal. But yeah, there was an opportunity again to get out of this early. Confirm, and that's good till canceled. I gotta make these good till canceled. Confirm and send. And so we're hoping that this stays reasonably strong at least through Monday morning, so we could be in good shape here on that one. Okay, but it should be a win either way. Should be a win either way. Okay, as long as it doesn't gap down against us, that would be a problem. All right. Sorry for the sloppy trade management. I'm just going to say that one more time. All right. So a newer trade I put on just before the close of the week is RSP. Okay, so let's look at RSP. The model portfolio overall still doing very well, and RSP is an interesting one. This is where I am both long and short. So I'm both bullish and bearish at the same time. And we have a situation where we're kind of in the middle of a trading range. We've got mixed signals here. Unbalanced volume has formed a lower low, but we have 20 SMA support. Okay, so what I'm got into was a diagonal spread where I'm short at 215 and 210. Short at 215 and 210. I just had to do the best I could with the strikes available. And I've got these little alerts that let me know if the shorts are almost going in the money, right? And if those shorts are threatened, whichever one is threatened first, if either one of them are, I'll want to roll that one either further out of the money. So I'll roll the short further out of the money, hold the long. And what we want here is we want this to pick a direction, preferably in an orderly fashion. Pick a direction in an orderly fashion. And in many ways, this is holding up better than the S&P. So this is the equal weighted S&P. So what it does is those big, heavy tech sectors, financial, healthcare sectors that weigh heavily on the S&P are equal weighted with all of the sectors. Okay, that's what the RSP is. So if you look at the SPY, because of the relative weakness in the big tech and the semis, the SPY is underperforming the RSP. So if you want to be long the market, but you don't want all that semiconductor exposure, RSP is another way to go. Okay. And so again, the unbalanced volume forming a lower low. So it's a little bit of weakness here, but you're sitting in a buy zone as well. So you got a drop rally buy zone potentially. And so it'll be very interesting to see if this is supportive or whether it continues to drift lower. Okay. But at the end of the day, this box that we've been in for a long time, we're still sitting in a box, folks. And what did we tell you was likely to happen? Well, we were telling you that the seasonality suggests that we have been and should remain in a range. Not expecting markets to crash, not expecting them to bust out and bust out to new highs. Anything can happen, okay? But the seasonality suggests, meh. Seasonality suggests we'll have our ups, we'll have our downs, and then we'll have our ups, and then we'll have our downs. And so that's kind of where we're sitting right now with these thoughts. Okay, so let me continue on with the slides, and then we'll get to a couple of trade ideas. Last week, of course, the Iran strikes continue. They continue through the weekend. And what's changed a little bit about this is maybe some additional concerns is that, the war seems to be, strikes are happening in places like Jordan and near the Red Sea and, places like that. So we continue. There's somehow, somewhere, they're still finding these kamikaze drones to launch and things like that. Some of those missiles are being knocked down by Kuwait, places like that. But Iran continues to strike, and we continue to strike Iran. And so things, couple of soldiers unfortunately passing away. And so this is ongoing, and that's going to kind of weigh on these oil prices. Okay, it's also a very specific concern, and has been for a while now, about China maybe coming up with a much cheaper way to do AI. And so that's been in the news a little bit as well. So there's some little concerns here going on about all these investments we're making in AI and when are they going to pay off and that sort of thing. So people like Google, going to be reporting soon. And so we got some big tech reporting soon. And they're in a position where, man, some of their latest AI stuff, their latest revision of their AI is not going to be ready in time. So they're having some struggles over there too at Google. If you're wondering why their stock is failing to do much, semis down despite their very strong earnings from Taiwan Semiconductor. But we did get some good news on inflation. PPI, CPI seem to be very good numbers on that. But that's looking back. June. And with new concerns in Iran, the oil's back above $80 a barrel. And in June, it got back down into the 60s. So that's going to be a dynamic situation with the price of oil and how it affects inflation. Earnings were a big fail for Netflix, so they did very poorly. Net. The markets were a little soft. The Russell, the small caps, outperforming, and so that's kind of interesting. So I do have one small position in the Russell, and because I think that is has been looking better, and the pattern just looks better than the other major markets. So we looked at the SPY, but let me just show you what the Russell is looking like right here. See how the Russell looks much more under control, if you will. And you might even argue that the Dow the Dow was looking even better, but Friday was just a bad day all the way around. Whether you're looking at the Qs or the SPY or what have you, look at the on-balance volume dropping off hard. This pennant formation pattern clearly failed to the downside, and yet we're still sitting in this range. So, gosh, this is really a tough. I'm just saying trade the market in front of you. Basically, is what I'm saying. Looking forward, the strongest sectors were energy, real estate, staples, some of the boring stocks. Financials doing okay, and the weakest last week were tech. Clearly, especially semiconductor, consumer, and industrials. So oil, big bump, and that's 2 weeks in a row with oil bumping up a lot, and Bitcoin, starting to stabilize a little bit. Okay, So you can see energy did well on Friday. Everything else sucked, especially communications, consumer cyclical, tech, some of the more frisky sectors, if you will. Over the last week, real estate, energy, consumer defensive stocks. And over the last month, healthcare, energy, financial, real estate. So tech has not been lighting the world afire for the last month. And so here is this corridor of pain throughout semiconductor. And so yeah, this is the semiconductor sector, and this even semiconductor equipment, which had been holding up better, even that is starting to slip. And some of these memory, companies are slipping. Look at Netflix down 6%. Caterpillar got rocked too, so I'm not sure what happened there. But look, Apple showing some relative strength, Microsoft showing some relative strength, Oracle got pummeled. So we got a mixed bag here. I'm liking financials and the credit card companies. Energy is great, but I don't really trust it. And then you got boring stuff beyond that, healthcare and consumer staples. So the tech wedge is broken to the downside, unfortunately. Economy is still good though, and so there are still some good sectors out there to be traded. So this continued fighting in Iran and surrounding areas with rising oil prices won't help, and there's really not a lot of hope being held out for an accommodative Fed. If anything, people are saying we might have to raise rates despite these better inflation numbers. So that's kind of an ongoing thing. We're going to get another good glimpse of that before the end of this month for the next FOMC meeting. It might be instructive to take a quick peek um, at the I have a tool that shows me this. Where do I have that tool? Um, it is the no, it's the um, must be my money tool here. Yeah, I've got a. Is it the CME? I think I just type in CME and I think it'll come up. There we go. Fed Watch tool. Yep, CME. You can see that. There's a problem loading this content. But anyway, if you go to this website right here, if you can read that, snapshot it, and go there, it'll give you a decent idea of what is happening with the Fed or projected to happen with the Fed. And that's pretty accurate. It's a pretty accurate tool. So I'll come back to that later. All right. And so what else to expect? So not much in the way of economic reports. The ADP report could give us some confirmation or denial of how the jobs are going. The jobless claims report is kind of ho hum. New home sales could be interesting for that sector on Friday. But beyond that, you just got big earnings in Google and Tesla, ServiceNow, Intel, okay, American Express. So we got some bigger boys reporting this week, and we'll see if they're enough to move the market. So basically, we got a couple of strong sectors, healthcare and financials going forward. I'm just going based on the charts and what I'm seeing. So I think healthcare, and we're already long healthcare. We got that Boeing trade in healthcare. And then financials, we're wanting to be long financials still. We are with Bank of America. And everything else is kind of ho hum. And I don't know how many sectors are going to be weak next week. Some within this moderate range are weaker than others. But if we got a big, if the buyers came in on semiconductor, um, then we could blast off. So I'm not calling tech. I'm not projecting tech to be a weak sector necessarily, especially if it's at the bottom of its range. So we could get a bounce. I'm not projecting a bounce, but I'm also not saying that tech is for sure going to be a weak sector going forward. It has been, but I'm not sure it's going to be this coming week. So be cautious with trading tech. I've tended to sort of shy away from it a little bit, and I'm going to go ahead and trade other things until I get convinced, get a little conviction from the buyers on tech is kind of my attitude on that. So here are all of the earnings coming up. So AMC, like a meme stock, yeah, that'd be kind of interesting, I guess. There's AT&T, Intel. So the big boy, Texas Instruments is a big boy. IBM, interesting earnings coming up there. Yeah, so we're getting into the heart of trading, early part of the earnings season, but coming into it much stronger. So we got a lot more things going on. Halliburton, airlines, things like that coming in here. And so that's all I have slide wise. Let's look at a couple of setups here that I'm interested in. I'm a little bit bearish on TTD. This one just looks like it's doing the March of Shame here. I might want to do kind of a don't ask me to do too much kind of a trade here. So it's below its 50 SMA and it's just been trending down for the longest time. So why not expect it to go back down and test this low? So if you need something bearish in your portfolio, just maybe a little 1917 bear put spread. We've had decent success with these. So let's just put it in this little simple bearish trade on TTD. And I'm just going to go out. Maybe I'll go ahead and go. I think I'll go. Do I want to go all the way out to August monthly? I don't think so. I think it's liquid enough where I could go at the end of the month. Let me just see how these spreads. Yeah, these spreads look fine. So I'm going to go ahead and buy the 19 put and sell the 17 put out a couple of weeks, and that'll be relatively cheap. So we can do a bunch of contracts of that. It's only 85 cents. Let's just do 5 contracts. That should be enough. And try to get a decent fill on that. The bid strike. So confirm and send on that one. So buying the July 31 19 put and selling the July 31 17 put. But don't ask me to do too much. Bear put spread. I like that setup. And so then what else do we got here? So I'm looking at this company called XTN. Looks like it's holding up. This is kind of one of those basing type of opportunities here. Yeah, I don't know. I don't know if it's bullish enough. You got a little bit double resistance. I'm going to skip that one. Just kind of, if you want to be short, I'm not sure I do. But if you want to be short and go against semiconductor, SOX X, I mean, it does look like it's rolling over. A lot of these, if you look at the bow tie signal, might be flashing bearishness on the bow tie. But again, we're really close to a buying area here. This pivot point could support. So I'm not taking that one either. I'm just showing you that. But here's the trade that I think I like. So we've got one bearish. Let's do one bullish. This is a boing boing signal, folks. And this really doesn't look very bearish at all. It's definitely got upward momentum. And so I think it's a really good boing boing. So I'm going to take a bullish boing boing. We got a bear put spread and a bullish boing boing. So we got a pretty balanced portfolio. Doing that type of thing has served us well, And let's just go out to the August monthly and look to buy a long call, 35 to 45 delta. Oh, this can be an expensive one. Datadog is an expensive stock. I didn't realize it was so expensive. So yeah, that's only a $200 stock. Why is that so expensive? Well, that may be a good sign. That may mean that a lot of people agree with us that they want to get long Datadog. I feel like I'm reading this wrong. I'm shocked that it's $2,000. So if I were to buy, let's see, 35 to 45 delta, I could go as cheap as 290. All right, I'll do that for 16. The spread's kind of wide for Boing Boing, but it's an expensive stock, so it's got the potential to move a lot. Let me see if I can get it cheaper by. No, I want to go out to August monthly. You know what? I'm going to go for it. I'm going to buy the 290. What if I bought the 300? What if I fudge the rules just a little bit? That's a 33 delta, and the spread's much tighter. Okay, I'm going to fudge the rules just a smidge. I don't like to do that, but it's a lot cheaper and much tighter spread, so I'm going to buy the 300. I like round numbers. It makes sense that this is going to give me a better fill. All right, 300. long call on Datadog and send that. Okay, I think that's good for now. On behalf of Wealth Foundations Northwest, it's been my pleasure to have been your coach today. Good luck, good training, everyone. Take care. Bye bye.